Pop quiz, business owners. Revenue equals cash. Now, what I'm asking is, when you make revenue, it means that it's cash in your bank. Now, for some people, this will be true, depending on how your business is structured and or what you're selling more so. If you have a point of sale system, somebody comes to your register, they buy something from you, we're really only talking about the delay of your payment processor. But if you are somebody who is invoicing for services, invoicing for product, there's going to be a delay. And oftentimes, when we see revenue in our financials, it doesn't always equate to cash in the bank. And I want to just touch on that, because one of the things I have found with new clients that are coming to me for bookkeeping and accounting services is that they're struggling with cash flow. And they're saying, I'm making all of this money. I know revenue is strong because I'm sending out all these invoices, but I never have any cash. Why? What is going on? So let me explain to you some reasons why this could be happening and what you could do and where to look for the answers. So in the example that I gave with invoicing, I'm going to use services just because that's pretty straightforward and simple. So I'm an accountant. I have done, 10 hours of bookkeeping services. I send out an invoice, and you know what? That invoice has got terms of net 15. So what I've done is I have put revenue on my profit and loss, and I've created an accounts receivable item on my balance sheet. And what the accounts receivable says is, somebody owes me money. I have provided a service economically. I have earned revenue, but I haven't received it yet. It doesn't go into my cash account. It's going to go into this accounts receivable account. And so what happens is, a lot of time in our minds, we're like, yep, there's the revenue on the profit and loss, but we're not following up on the accounts receivable. So there ends up, in some instances, you've got this balance of accounts receivable that's growing and growing and growing. Accounts receivable is something that needs to be maintained, checked up on. And so what I would say, as part of your monthly review of your financials, look at that accounts receivable and start to implement some kind of company policy process that says, at 30 days, we're going to do a follow-up email. Hey, client A, we haven't received payment yet for your services or for our services. Just wanted to make sure you received the invoice, whatever. And don't be afraid to say, our company policy is that 90 days, we are going to refer your account to collections. Get a name of a collection agency. A lot of times, just the threat of collections will be enough to get people to move on the balance. Another thing I've seen in practice is people offering payment plans just as a way to collect, because some money is better than no money. And also, don't be afraid to put late fees and penalties on your invoices if people are not honoring your terms of net 15, net 30, whatever it might be. Don't neglect your accounts receivable, because this is money that is owed to you. I know every now and again, when I've gotten behind on my accounts receivable, I will go into my that balance and I'll think, man, what if I had that balance today? What would I do with that balance today? And then I'm a little bit more motivated. And this kind of leads me into my next point is, how well do you know your expenses? Because a lot of times revenue comes in, but even when we receive the cash, it's already spoken for. Now, I have a seasonal business, and so it is not uncommon for me to utilize debt during the periods where I'm not receiving a lot of income. And so when the income starts to come in, and again, I do taxes, and so there is a good chunk of change of my annual revenue that is being made in a short period of time. And I could tell you, at first, when I started to see, here comes 50% of my revenue in the first quarter of the year, I'm making it rain. I'm spending money. I am canceling out debt. The first year I gave bonuses. But let me tell you what happened shortly thereafter. And you know how this story goes. Come July, it was, oh my God, how am I going to pay my rent? And there have been years where it's like Allison doesn't get to take payroll for a few months because she didn't manage her cash. And so just getting really aware of what your expenses are, so you can kind of match the timing. And so and this is cash flow planning. This is setting up a budget for yourself. If you're really disciplined, maybe setting up little savings buckets for yourself. I have one client, it doesn't even really apply to their accounting, but what we do is we set up these accruals where it's like, okay, here is an accrual for your taxes. So every month we're going to figure out what you should be putting aside for taxes. Or clients that know that, hey, insurance is a really big expense for us and it all gets paid out in 1 month. And so we know, even though we're getting this revenue in, we need to now put it aside so that we can pay that insurance bill when it comes in. Because if you're constantly paying the bills as they come in without any intention or planning with the revenue that you've got and the cash that you've got, that's going to leave you feeling broke constantly. You're going to be chasing your tail. And I got to tell you, tax payments are one of the things that leave clients feeling like they're never caught up. So I would say it's really valuable to set up a budget for yourself, map out where your expenses are, and then be intentional with your cash as it does come in so that you feel like you've got some control between matching cash coming in, cash going out. Hope this was helpful. If you like the content, please like and subscribe so I know what you guys are all interested in learning about.